Oh, you mentioned us potentially being in the fourth inning here of some of the AI kind of landscape and this next iteration, we should say, of AI, because it is a kind of decades-long journey that we've had just to get here. But all these things considered, we've heard a lot from companies like Nvidia about a future where there is a 1 million chip data center. For Nvidia, what more do you need to hear from them when they report this earnings season about how close we could be to eventually seeing that? When are we going to see, from your estimation, these 1 million chip data centers?
That's that's a tough question to answer. That's tough to tell. So unfortunately, at times improvements and/or innovation and technology suddenly skyrocket, and at times, we basically feel satisfied with what we have, and we continue to utilize that. So it really remains to be seen. It could be 5 years, it could be 10 years. I can't really answer that question. But in terms of Nvidia, though, I think they've done a pretty good job by basically having that full stack of products, right? Having that full stack of offering around their GPUs. Because some of the main issues that we're facing overall when it comes to the AI cycle, for example, is power, is electricity. I mean, those data centers need to be run 24/7, especially when you're talking about the training side of it. So the question is, can those chips operate a little bit more efficiently? How can you allocate, again, more efficiently power to, at certain times to certain parts of the servers and the data centers to certain tasks. And what's good about NVIDIA is it does provide the software that can help do that. So that's just one example of that full stack that it provides. So, given their current leadership, of course, the first mover, and they've got a dominant market share, it seems that all of that full stack may create a switching cost for those guys. And that's a pretty good moat, pretty good competitive advantage to have. So I think they're still actually very well positioned in this entire AI cycle that we're experiencing right now.
Investors right now who have been tracking the ticker symbol NVDA, they're also seeing in the second half of 2024, Nvidia shares down right now by a little bit more than 10%. All that considered, what would you say to those who are looking to try and figure out what a viable entry point is to Nvidia, even at this juncture?
Yeah, it's tough. It's declined a little bit. It's given back. I mean, there is some sense that there is some rotation into the SMIDs, or I should say, small mid caps. As we've seen, Russell 2000 perform pretty well. But in terms of our valuation, we value it currently at around, between 140, 150. So I would say probably some additional downside may be needed for new investors to come in. But for investors that are in the name right now, I think it's better to remain with the leader in the market, in the AI market, and that's benefiting from all fronts when it comes to AI development, and AI growth. So that's my view on Nvidia.
Ali Mogharabi, who is the senior equity analyst over at WestEnd Capital Management. Hey, great to have you here with us this morning, and thanks so much for the timely insights and analysis. Appreciate it.